Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 10th, 2025, and we're diving into the latest earnings report from ReNew, a leading decarbonization solutions company. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ReNew has just released its Q2 FY26 earnings report, and there's a lot to unpack, from their operational highlights to financial performance.
Revenue and profitability overview. Let's start with the financials. ReNew reported a total revenue of $434 million for Q2 FY26, which is a 29% increase over the same quarter last year. However, the net profit saw a slight decline to $53 million. John, can you explain these figures?
Absolutely. The revenue growth is primarily driven by an increase in operational capacity and external sales from their solar module and cell manufacturing operations. However, the net profit was impacted by higher raw material costs, increased finance costs, and lower plant load factors. Despite these challenges, the Adjusted EBITDA improved to $296 million, reflecting operational efficiencies.
And how did the earnings per share compare to expectations?
The EPS for Q2 FY26 came in at 13 cents, which fell short of the forecasted 17 cents by analysts. This miss can be attributed to the factors affecting net profit, as mentioned earlier.
Operational highlights and capacity expansion. ReNew has been expanding its capacity significantly. Can you tell us more about their operational highlights?
ReNew's total portfolio now stands at approximately 18.5 gigawatts, with a commissioned capacity of about 11.4 gigawatts. In Q2 FY26 alone, they commissioned 330, including 284 megawatts of wind and 50 megawatts of solar capacity. Their solar module manufacturing facilities are also operational, with a capacity of 6.5 gigawatt, which is a substantial addition to their capabilities.
That's impressive growth. How does this position them in the market?
This positions ReNew as a major player in the renewable energy sector, particularly in India. Their focus on expanding both wind and solar capacities, along with manufacturing capabilities, aligns well with the global shift towards clean energy solutions.
Financial metrics and cash flow. Let's talk about ReNew's financial health. How are they managing their cash flow and debt?
ReNew generated $325 million in cash from operations in Q2 FY26, which is a significant increase from the previous year. They have a robust liquidity position with $1.1 billion in cash and equivalents. However, their net debt stands at $7.35 billion, which is substantial but manageable given their cash flow generation and strategic investments.
What about their capital expenditures?
In Q2 FY26, ReNew's CapEx was $323 million, primarily for commissioning new solar and wind projects. This investment is crucial for their growth strategy and aligns with their long-term goals of expanding renewable energy capacity.
Future outlook and strategic initiatives. Looking ahead, what can we expect from ReNew in terms of strategic initiatives and future outlook?
ReNew has reiterated its FY26 guidance, expecting to complete the construction of 1.6 to 2.4 gigawatts by the end of the fiscal year. They anticipate Adjusted EBITDA between INR 87 to 93 billion and cash flow to equity of INR 14 to 17 billion. Their capital recycling strategy, which includes asset sales, is expected to continue contributing to their financial performance.
How does this guidance reflect on their strategic direction?
The guidance underscores ReNew's commitment to expanding its renewable energy footprint while maintaining financial discipline. Their focus on asset sales as part of the capital recycling strategy is a prudent approach to managing debt and funding growth.
Key takeaways. In summary, ReNew has shown strong revenue growth and operational expansion, although they missed EPS expectations this quarter. Their cash flow remains robust, and they have ambitious plans for future capacity expansion. John, any final thoughts?
ReNew is well positioned in the renewable energy sector with its strategic initiatives and capacity growth. While the EPS miss is a concern, their overall financial health and future outlook remain positive.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on ReNew's performance in the comments below.